Good morning, everyone, and welcome to Nadex Morning Analysis, where we look at hot spots in the market today, discuss what news is out there, and what you should be paying attention to for this Friday, February 5th. My name is Todd Rich. I am with Nadex. With me, my good friend Brian Caprice from Keep Trading Simple. Before Brian and I jump into it, I do need to share that trading involves risk and may not be appropriate for everyone, and that any trading decisions you make are solely your responsibility and at your own risk. Lastly, this is an educational session. Please do not construe anything Brian or I say as a buy or sell recommendation. We are doing this for your education purposes. So with that, I'm actually going to do this, and let me just kind of tee up our discussion quickly. We had some economic news come out in the last hour, and it's definitely impacting the markets. What we had, non-farm payrolls. We did add 49,000 people to the payrolls. But with that also came a revised number from December, where they had thought we lost 140,000, but we really lost 227,000. So it just goes to show they give us these numbers and then they revise them later, and they're not even close to what they had originally thought. We also had our unemployment rate. Now, while the non-farm payrolls, while we were looking for more, unemployment rate actually fell to 6.3%, down from 6.7%. So that's actually some pretty good news. And then we'll bring up eventually the other news, which was a stimulus package was agreed upon. Now they're working on the specific budget through the committees. So a lot to digest there, but I think where we've seen the greatest impact, let's first take a look at how the dollar has been impacted. So Brian, you want to start us off with a little bit here, and I think we saw an emotional move in the euro US dollar.
Yeah, I mean, obviously these numbers back and forth, again, just kind of framed by having one red, one green is kind of what I would call split number. If this is all red or all green, you tend to get double amounts you would typically get. So while we've seen some reaction, this also leads a lot of times to a bit of investment back and forth. Now, the CAD actually, I mentioned the CAD as well. The CAD got absolutely hammered this morning, which is very, very surprising. But this is quite a large jump. And just so everybody out there can understand, the unemployment rate, that there's a lot of data that comes in the back end. Having the non-farm employment change numbers being off this much messes the unemployment rate up. So, again, more reason why most likely some type of a retracement today in the dollar. And again, remember, the one thing about this unemployment rate, too, make sure that we bring up is this unemployment rate is not necessarily a true figure. Powell last month said that the real unemployment rate is probably closer to 10%, not 6.7% that it currently was. So remember, there's an unemployment rate that is published, but then there's actually a real unemployment rate. Because remember, if you're not participating because, say, you are home taking care of your children with COVID, right, because they're not in school, you're not really out there looking for a job, you don't factor into the unemployment rate. So again, this is it's a strange, a lot of people don't understand it fully. And again, that leads over to kind of bumps in the market. Now, an area we've talked about earlier this week was this 1960 to 1949 level. We ended up bouncing off of it. And interestingly enough, if you guys look at what the blue squares are, these are the European session opens to the US session open. So we were already bouncing off the level, driving higher, and then all of a sudden we got our non-farm news, and again, drove us even higher. Now, we're continuing to push, and remember, the retail trader doesn't come really into the market for another 25 more minutes, so they still have time to react to this. With all this overnight movement, what I'd be doing is probably looking for, and again, it's hard to see because there's a bunch of little levels here. Maybe I'll go up to an hourly. Yeah, hourly can see it a little bit more clear. You can see that approximately around 120-40-ish range, we have a couple different areas where sellers have already stepped in. And you can see they've stepped in just a bit higher at the 120-50 area. But the 120 kind of 30-70 area here is I would say has a decent probability of kind of rolling. Now, remember, this is more of a kind of dollar weakness play. And stimulus coming through, I mean, that's why you've seen all this movement in this position thus far, again, because of this. But eventually when people kind of dive into that, they can say, hey, listen, there's, maybe it's not as bad as we think. Because remember, it's not. I don't know. I mean, here's the news that really drove that higher, right? They passed the stimulus, but I mean, again, it was one of those situations where it may be a little bit of a riskier position. And while it sounds great on paper, when you roll into it, it kind of, they passed 800, they drafted 800 amendments. They were voting for 15 hours. I don't know. It doesn't sound like the smartest thing in the world is voting on something this big. And then some of the smaller things like minimum wage got blocked. So it wasn't the ideal bill for the Democrats either. And I think on the surface, when everybody says, hey, stimulus looks great, that's weak dollar, when it kind of when people start to really digest it and that emotional response from the U.S. market open is there, we could get kind of a reversal.
Right.
I mean,
not to mention
again, the economy is great, right? But then why is it showing dollar weakness?
Right.
Right? It's kind of one of those responses.
And not to mention the fact that while they have a headline number and it sounds really cool, 1.9 trillion, and that's but the truth of the matter is, if you actually start reading into it, yes, they have a top line number, but they have no idea how they're going to allocate that in the budget.
Yeah, which completely confuses me. How do you come up with the top line number unless you know what's
going on
into
underneath
it?
So
it's the monkey again. So it's the monkey with the darts.
They're giving all of the committees until mid. They're giving the committees a couple of weeks to actually come up with their specific budgets. So you got to keep an eye and wait and see what that actually how that manifests itself.
The story's not over.
Yeah, right. The story's not over, so we're gonna have to keep our eye on it. I am gonna look here. These are the binary options. These are the dailies here, and we saw this large emotional spike. If actually you can see that it even ran higher and pulled back. We're seeing some pretty large candles in here. Now, interestingly, they are swinging around, but they're ending up green. So we still have buyers stepping in, but it looks like the liquidity isn't there. I mean, they're still trying to figure it out. Everyone's still digesting. I am going to put up here, this is that level right around 120.40-ish. And let's just put this on the chart up here where we've seen sellers step in. We know this is a level up here. So if you're looking for a reversal today, if it got up here, would be an opportunity where you could potentially take a look at some of these binary options. I mean, these probabilities would all change, right? If it got up in here, the probability right around this 120.40 level would be somewhere around 50-50. And if it was a little below, it'd be slightly below 50. But binary options definitely an interesting potential play, and we're watching as it moves through multiple strike levels. But you can see long candles, long emotional move. These wicks are getting kind of long too. So Euro US dollar, definitely a hot spot. Keep your eye on that. While we're on the discussion of the dollar, I think there was one you wanted to discuss because I think it's a great follow-up.
Yeah, like I said, whenever I have the opportunity to kind of help teach, I know it's definitely what my passion is about and why I do these. So this is, again, if you guys remember the pound dollar, we've been talking about knockouts. And remember this kind of strange brown bar. It was easy for you guys to see, but that's why I had it up here. I was going to see if I would make it a little bit easier. Yeah, it's probably a little bit better. So yesterday morning we had, let's bring this back up. We had all this pound data, and we talked about how pound was basically a rock bottom. They weren't going to drop any lower. Asset purchases looked like they were good. All the votes, the monetary policy statement, it was the ideal opportunity to get into this position. Well, that's where 7 o'clock. And we talked about how when all the stars align, and when I mean the stars, I mean that we had a knockout bracket with a low entry of risk, right? Why? Because we were near the floor. If it went down, we lost the cost. Plus the cost of the transaction, we had an initial huge bump. And as you can see, this has continued to just, kind of grind higher. And with the U.S. data today, this has the opportunity to go even a bit higher. Now, remember, if this was a binary, this wouldn't have worked because it would have expired. So this is a trade now with knockouts that we've had going on for 2 days, and it's continued to push higher. And then with the dollar news today, we still have a little bit more room to run. And now the question is, when do we take our profit? Do we take it out now? Do we wait for it just to expire? And again, that's based off individual person. For me, I like the initial spike at the 130, get out. Right now, we've had a high of about 154 pips movement in this one. So again, we're well beyond, the 1 to 10 risk to reward ratio set up on this trade. And again, this is something that Knox can do that the other assets, again, they can't do. So it's about driving the right vehicle to get to your destination. This one just continues to, like I said, continue to push higher. But I always like it when we can track something over 2 days and again hold the same position. I wish everything had these, had this ability, but unfortunately.
But that is an absolutely critical lesson, and I can't emphasize that enough. And I know that people that tend to be successful trading Nadex binary options, knockouts, call spreads aren't waiting until expiration to see what happens. In fact, if you take nothing away from today and you take one pearl of wisdom of education, and this is true for any option you trade. So if you're trading equity options, I'm just going to throw this out there for you too. Just because there's an expiration associated with an option does not mean you need to wait until expiration to see what happens. You can choose to exit your position early. You can choose to exit a position early, one, to stop losses. Oops, I was wrong. It's going against me. I'm changing my opinion. Or you can do it to lock in profits. The saying in the industry is no one ever went broke ringing the cash register. And here's a position where, if you did this pound dollar trade, if you did it in binary options and it went your way, and yeah, you made money and those settled, and that was fantastic. That is great. You moved on to the next trade. With knockouts, because they trade in a range, and these don't have that. They're only the settlement. The trigger for settlement is either a price, it hits one of the boundaries, or time, the end of the week. If it's gone your way, and now the conditions in the market start changing, but you've made a profit, you might want to consider saying, thank you very much, unwind your position, simply trade out of it, which you can do. Just do the exact opposite of what you currently have and say thank you and move on to your next trade where you think you might have greater probability or opportunity for profit. So taking profits is not a bad thing. You just got to make a determination on where that might be. I love throwing in a lesson like that. I really do. And Brian, that's an excellent shout out. Let's just quickly bring us home here. With the news, we're seeing, while we've got some interesting news on non-farm payrolls, unemployment ratio, we're certainly sounding encouraging. The revisions on some of these past numbers, terribly frightening. But we've got the stimulus. So that stimulus, this is that difference between the economy and the markets. With the stimulus coming in, we're seeing equities up a bit across the board. So maybe you could talk about what we might see on the open here in just over 15 minutes. But we are seeing an impact definitely in gold. So let's just do those and we'll call it a day.
Yeah, I mean, right now, putting more money back out into the markets, always a good thing. There's no specifics, but again, coming down and you're still paying people large amount. I mean, all the recipes are there, right? I mean, supposedly COVID is getting better. Numbers are coming down. We're still doing as big a stimulus package as we thought. Again, more money means people are going to spend more money, which means earnings can be better, which again, it's one of those things. The checks and balances system doesn't seem like it's working around. But I would say right now, look for these things potentially. Again, being a Friday, being that stimulus is here. Again, more COVID rollout. Everything is there for, again, pushing to all-time highs in a lot of these indices. So I'd be looking for decent pullback levels. Look for levels of basing. Again, the best way to do it right now when we don't have the open, but I would say look at some of these things on like the smaller 15-minute levels. And even where we are right now, just pulling this one up on a 15, you can see that we have an area right here where it looks like we could take a bounce higher. Retail trader steps in 15 and says, "Hey, wow, unemployment went down. We got money to go. Let's roll."
Right.
So it's just one of those positive things. And then looking at gold, you're seeing gold kind of go down, and it's kind of like, well, the unemployment number is really, really bad. Or the December, but stimulus money's there. But I will say the one issue is when you send it back to the individual kind of committees, that's where you're going to have a little bit more problems passing and getting the agenda you want through, because the committees are typically mixed. So I think that's where the pothole is going to be, is individual committees, because they can't force that through the same way.
Yeah.
So
that is, by the way, this is kind of interesting, because while we were talking here, initially the reaction on all this news was, gold popping.
Yeah.
And it immediately rolled over.
Mhm.
So now I am going to go back. Just this is kind of interesting. I love the setup we had earlier with that 1830 level, where we had that Harry Potter, and it really did. It went to the downside.
Mhm.
Um, we were called, 1800 an emotional level. It actually was able to push through 1800, but then just continue to drift higher. Um, some quick emotional moves up, but there is clearly somebody out there selling, because every time gold pops up, I mean, you could somebody stepping in and selling. And again, we got this emotional pop up in the very next candle. We're all the way back down, and this just happened in the last half hour. In the last, right? So this is a
Mhm.
15-minute chart. The news comes out, and you can see this green spike up. Hey, people are going to start. We might economic stimulus is coming. Here comes gold, and the very next candle we're red, and we're pushing
Mhm.
right back down. So
Yeah, I mean, there's an hourly level right there at 1807 to 1811. So again, it kind of got really close and then rolled back over. It's an area that, if you want to flip over real quick, I have it up on the screen.
here, and I'm doing it on this one. I'll flip it over here. We'll do that.
Yeah, you can see it. I mean, here's the entire level. I don't know if you can see the dots, but there's the entire level. The area that sellers have stepped in the past. It's not using that crystal ball. It's looking and looking at saying, "Hey, listen, sellers came in." Let me do the cursor real quick. Sellers came in, pushed down, came back up and tested that level. They said, "Oh, yep, there's sellers there," and drove it down. So when it tried back up again, it looks like it got front run from the same exact area. So just an area to watch out for here. That while it looked great, again, sellers have confirmed themselves at that area. So just an area to be cautious. And again, if we get another pop up for that area, it's definitely a probable case for a reversal to push back down. And I would say downward side targets today. I'm going to take this one short. Would have to be down here in the 1788 range.
Excellent. All right, with that, because equity markets open in 13 minutes. You got any questions for Nadex? Email us, customer service at nadex.com. I'll push out the Trust Pilot again. If you got an opportunity to give us a review, we would greatly appreciate it. Got any questions for Brian? Catch him on email at support@keeptradingsimple.com. And listen, we got a lot of things to be looking at. There's economic numbers that all came out. We've got stimulus that we're going to keep our eyes on. You had an opportunity to take a look at that euro US dollar potential rollover as it continues to creep higher up towards 120.40-ish level. Got a great lesson in the pound dollar. U.S. equity is going to open up here. Let's see what how U.S. traders digest this. And that's a lot of things to be looking at too over the weekend. So when you've got some things today, but also some things to be looking at Sunday evening when the markets open again. With that, Brian and I will catch you on Monday morning, and want to wish everyone good luck in the markets.